So we're back here on 970 WFLA. We're going to talk next about the local real estate statistics. And I think, what we found, what we're seeing on our team is real similar to what we're seeing in the marketplace. And Robert, you can kind of speak to this, but pending home sales surged in May, which are, kind of June and July closings, which I think we've got, our best, July's looking like our best month of the year. But we're seeing a lot of quick home sales. We put homes, we put $200,000, $300,000, $400,000 homes on the market, and we're talking in a matter of days before we're seeing offers, and in many instances, multiple offers coming through.
Yeah, especially if the home is competitively priced, and with the marketing that we do, I mean, we're really seeing stuff move again. It was kind of a lull there a couple months ago where kind of wondered which way the market was going to go, and I think even you watch some of the financial shows and all that, they were kind of wondering the same thing, and it seems like the market really jumped in a good way.
For us in Tampa Bay, what's interesting is we always talk about these local statistics because real estate is a hyper-local market. It always matters what you're doing right here and what's going on here. But I talked to some people in other parts of the country, and they're seeing a slowdown. They're seeing a turn in the other direction.
Well, and I almost think we're always, and I could be wrong, I almost feel like we're always a little bit ahead of the curve.
We are, yeah.
The market went down here first, the hedge funds came in here
right.
first, we kind of saw the slowdown, and now right. we're seeing it pick up again.
So a couple of the measurable pieces of data: average sale price in Tampa Bay, $197,000. That's up a couple percentage points from last month. 2,469 home sales, which is the most number of home sales that we've had in a month this year, on par with months from last year when we had the hedge funds. So the hedge funds obviously made up 10 to 20% of the sales in our market, in any given month last year. So 197,000 average price. Average days on market is about 80. And month supply is about 4. So again, a pretty balanced real estate market, a healthy real estate market. 80 days on market is consistent with what we've seen the last few months. 4 months of inventory, again, consistent. But the number of home sales rising was fantastic, and I think it's a combination of a variety of things. You've got, at least locally, we have large employers, coming to Tampa Bay. We've got the government with the Air Force Base restructuring, moving people around. Amazon, bringing a lot of people. Builders, are back, really pushing out, new inventory. And it seems like we're starting to turn the corner with first-time home buyers again. We went through a period where it seemed like first-time home buyers almost checked out. They're like, forget it, we're just going to rent because they couldn't compete with, all the hedge funds.
Yeah, the market feels really healthy. I think last year the hedge funds scared a lot of first-time home buyers, and now that they've probably rented for a year, they're back in the market.
Yeah, and I think it's a good sign, and I definitely encourage the first-time home buyers to get out there. Interest rates are still, John, I mean, you can speak to this. What are we looking at for interest rates for a typical, and I know it depends, but what are they kind of running?
Typically low 4s, upper 3s, so no, they're great.
Yeah, so again, historically low. I mean, not the lowest ever, but very affordable for a first-time home buyer to get into a home today. Lower down payments if they go FHA, they're with 3.5%. VA zero,
USDA 0.
And USDA, what's surprising, a lot of people don't realize this because they don't really understand what USDA is. They think it's some sort of crazy, rural loan program.
You have to buy a farm.
Right, it's a farm, or my wife jokes with me that I grew up on a farm because I grew up in Indiana. But nonetheless, it's not the case. You've got Wesley Chapel, you got Fishhawk, you got a lot of East Hillsboro new construction. Even past Land O'Lakes, you've got so there's a lot of Tampa Bay that's covered by a no down payment loan with very competitive interest rates and costs.
Yeah, so very good. Yeah.
So that's and speaking to the hedge funds and kind of how they relate to the statistics. So we've more or less now in the marketplace replaced the hedge funds. In terms of last year, we had 2,500 sales in a month. And a lot of that was driven by hedge funds. Well, we're back to that 2,500 sales number, and I mean, very, very few hedge fund, deals. They moved out of our market. They realized they couldn't make the rent numbers on an annual basis that they wanted to make, so they've kind of moved around. However, word is starting to hit the street that some of the hedge funds are wanting to start going to more speculative areas. So they're wanting to go and buy in areas where they don't care about the rent money as much, but they think there's going to be huge value increases. So South Florida, for example, is getting a surge right now of hedge fund purchases, not because they care about Not because they care about the yield, but because they think that they're going to buy it and in a year or two it's going to be worth more money. And we're already starting to see those hedge funds selling homes. It's surprising because I think a lot of people expected, that the hedge funds were buying and they were going to hold them for 5 and 7 years. But just this week in Tampa Bay, I came across 2 listings that were hedge fund homes that were bought by hedge funds that now the hedge funds are selling. And I don't know how they determine which ones they decide to sell, but the whole point of them, buying was because they wanted an annual yield. But at some point there's going to be an exit strategy. So I don't know if their exit strategy is beginning and they're going to say, oh, let's start unloading a bunch of them, or if they're just doing it strategically. But some of the hedge funds are already starting to to look at, hey, look, we can make profit on this. Let's get out of this one. So, and I think that certainly bodes well for inventory and for consumers because they're going to be relatively turnkey homes. And I think if the hedge funds look at the same data we look at, they say, oh, a surge from first-time home buyers. We've got a lot of homes that first-time home buyers would love. We might be able to get a premium for them. So over the coming months, it'll be interesting to see how it affects inventory and how it affects the statistics and pricing, if they are going to start trickling out, some of the homes that they bought.